Hello traders, Gary Wagner here just before 12 noon in Honolulu, 6 o'clock in New York. It is Tuesday, 10th day of July, 2018, and this is the daily report for gold and silver. Gold and silver do close lower on the day, with gold closing at $1,256.40. That is a net decline of $3.20. A decline of about 3.5 cents in silver, closing at $16.10, and that's all in light of a stronger U.S. dollar, up approximately 6 points, closing at 93.86. Dow Jones Industrial Average continues to move back and is close to going above 25,000 once again, closing at 24,919, net gain of 143 points, and Bitcoin futures losing $340 in trading, closing at 63.55. Traders, once again, we do have gold pricing returning to trade under pressure. Gold currently down about $3.20 at $1256.40. Just like yesterday, the most noteworthy aspect in terms of the price range was the fact that it unsuccessfully tested current resistance at 1267. It did have this extended high that was well outside of the range between the open and close. We are pretty much getting the opposite today, with an extended range, a very, very narrow range between the open and closing price, and an extended range to the downside. Today, we hit a pretty decent low when the market traded to 1247.70. Of course, we are pegging major support right now at approximately 1238. We can see that that recent low, this came in July 3rd, matches up almost to the letter with the lows that came in at the end of December. And so to me, that is absolutely a critical area that gold must hold if we are to see any kind of stabilization of price after such a dramatic decline over a series of stages, starting at 1370, attempting to find some support at the 61% retracement, actually tracking up a little bit before breaking below that critical support level. And that also was the point in which the moving averages crossed and we got that death cross. At the same time, of course, we had dollar strength that was the most prevalent factor influencing gold pricing. My sense right now is that the fact that we were unsuccessful in taking out these highs yesterday, and the fact that today we have not only a lower high but also a lower low, tells me that all things being equal, we could see gold go back and actually test these recent lows at around 1238. And interestingly enough, as we spoke about in the opening letter today, when we look at both the dollar as well as gold, we see these exaggerated ranges and at the same time, a very narrow range between where the market opened and where it closed, both yesterday as well as today. Obviously, we have the reciprocal opposite, in which we had the dollar test support levels yesterday, just when gold was testing resistance, and today we had it come up near the high, which is really getting closer to testing current resistance, because we put major resistance in the dollar index at approximately 95. We know that over the last couple of weeks it has unsuccessfully tested this area and not been able to close above it for more than a single day before returning back to lower pricing. The key right now, as far as I'm concerned, is the fact that we do have, I believe, a major support level in the dollar at around 93.42. That matches up with yesterday's low. All things being equal, we could see the dollar gain some strength over the remainder of the week. And if we see gold go to retest the recent lows at 1238, it will be because the dollar is once again testing resistance at right around 95. Therefore, my recommendation is to maintain our neutral stance with no active trades in gold or silver until we break above or below these current levels of support and resistance, both in the dollar as well as gold. And traders, silver is not faring much better than recent activity in gold. We talked about the fact yesterday that we've had a narrow and defined range for the better part of the last 3 or 4 months. That range is defined on the support side at around 1610. That, of course, was obviously broken in July. And then we had our resistance area, aside from a couple of pops, that came in roughly at 17. We talked about the fact yesterday that it appeared as though silver might in fact go back into that range, but with today's lower close and exaggerated low, we might be making a play for these recent lows. And in terms of silver pricing, that comes in between 1578 and 1580. And traders, lastly, a quick look at Bitcoin futures, off by about $325, currently tracked at $6,370 per coin. It dropped about 5% on the day. Although we saw some real support come into the market after challenging these lows. This is a weekly candlestick chart, but after challenging these lows below 6,000, we see that we had some real resistance come into the market just under 7,000. That would be this area right here. And today's close below the 64.85 level tells me that we could once again see lower pricing in Bitcoin. It's going to be all about whether or not these recent lows just below 6,000 hold, because I believe a break below that price point would be significant and could really challenge where Bitcoin futures have been trading at since the contract started trading at the end of last year. I'm looking at $3,000 to $4,000 per coin if in fact we once again break below $6,000 per coin. Traders, as we've talked about over the last couple of days, the key to the future price of gold is absolutely contingent on what the dollar does. We've seen an exaggerated range both in the dollar and gold over yesterday and today, and it is my sense that we might see gold go and test the recent lows at around 1240, and that of course would correspond with the dollar breaking and trading back above 95. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.